Hey everyone, welcome back. My name's Levi. It is Tuesday, September 16th. This is Drawbridge Finance. This is the members only live stream. I see my sign isn't on. Markets are down slightly today. My account is up. This is pretty typical for me because I do hold, I hold long Vega. I typically hold fairly neutral delta, especially with the market pushing up the way that it has. My deltas are becoming shorter and shorter. So even though I've been leaning long for the last couple of months, I'm starting to tailor that off, and we're starting to become into a more typical rounded portfolio profile, which means that I make money in both an up or down market. I'm playing both sides at the same time, and I'm just looking for theta decay, and I'm looking for very specific trades that can make me money. I see Rock is on here and Kevin Hawthorne is here. Fantastic to see you guys as always, so appreciate you joining. Last week we had an exciting week. We have, we'll take a look at RZLV. Absolutely, excuse me. Swallowing myself here. The last week on the live stream had that little Oracle earnings play. I'm gonna just jump right into what happened in my Moomoo account. Now, I had quite a few trades on that were working very, very well. But if you guys recall, I had $4,200 in here last week, just not even $4,062. So I've seen an astronomical growth. A little bit hard to show you actually on the Moomoo desktop because they don't have the nice chart, but I am going to show you. I'm just going to go back to this camera for a second. I'm going to show you on my phone. So there is my trend analysis. You're going to see this in a second here, as soon as my camera focuses. So there's the assets and the profit and loss calculator. You can see that this month, and this is a real return here. This was August. I started this account last month. I'm just going to try to scroll up here for you. I didn't do very much trading at all. I got, we're getting a little notification there about Rivian. I didn't do much trading at all in the very first 2 weeks. I was kind of getting my account sorted out. So you can see there was just like $1 or, just a couple dollars per day on those first couple of days. But when I got into actually trading in this account, you can see it made, $30 minus 60 plus 55 plus 130. And then on Tuesday, the 9th, last week, I put in that little Oracle trade, and you can see I made a $1,100 return on the 10th. I want to go over how exactly, hopefully you guys watched the video anyways. You were here for the live stream anyways. So you saw I took like a $90 risk, just over 90 bucks, and I had a very, very high potential reward trade. I'm going to show you exactly what I did with that, because not only did it win, it needed an adjustment, and I made even more money than I could have if I had just left it alone. So my rolling options record keeper helps me so much. Now, remember when I put in this trade, September 9th, we look at this column, this was the trade that I put in, and I did this for you live right in my account. $240 was where Oracle was trading. The idea was that there was potential that it could go rocketing upwards. And now I wasn't trying to catch the whole move. I only needed it to go above 285. So what I did was I did a call spread. This is a bullish call spread. I sold a 285 call and I purchased a 275 call. This gives me an asymmetric reward, which means that if the stock was to go up, I could make an astronomical amount of money relative to how much I was risking. Now in this case, I paid $96 for this, a 96-cent debit, one contract, 96 bucks. I had no fees. Thank you, Moomoo. I've got no fees because I've just started my account. They have a little promo, so I get the commissions free for a while, which has been fantastic. And let's just take a look at what that looked like. So we're gonna look at the blue line on here. There's a lot of lines going on, but this was my initial trade, and there was the green vertical line is where Oracle was trading at $240. That's where it started. And my assumption was that it could jump up, and it could potentially jump up over 300, which it did. So what it did was it jumped way, way further than we expected. It went up 22%, and from 240, it went up to 337. At this point in time, it was only the next day. What I needed to do was potentially I needed to either close the trade for a win or make an adjustment to it. And what I chose to do was keep the same date, September 12th. I chose to buy a bearish put spread. Now, why might I do this? Typically, when we see that kind of earnings gain, when we see the stock jump up like 22%, there's a lot of times where the next couple of days it can drift back down. And I was playing for that. You know, I've been trading for almost 30 years now. I understand how the mechanics of these things work. And when I see that move, I think, well, maybe there's a little bit of retracement. At that time, it was very inexpensive for me to buy another spread. So I did the exact same thing, but in reverse. I bought a 297 long put and I sold a 287.5 put. This was another $10 widespread and I paid 47 bucks for this. Now, the interesting thing is that when you do this, what I was doing was I was altering my profit profile from the blue line to the red line. And what it did was it created this little free butterfly, so to speak. At that point in time, I had spent 96 bucks and then I had spent another $47. So I had a net debit, but I was going to be able to close this butterfly for at least $1,000, regardless of where the position was. But I had the opportunity of it falling into this tent and retracing back from the 330. Now remember, 330 is like way up here. You know, 330 is well above. That's where this was when I made this adjustment. And what happened by Friday, you can see what happened on the September 11th. The very next day, actually, the stock was still above 318. And I looked at this and that call spread, which I was going to get a net credit to close for $10, I was able to close out for $9.93. So I did that. I took the $9.93. What that does is it further adjusts my profit profile. And now I was in this yellow trade, which means that at minimum, I was going to make 850 bucks if the stock stayed above $300. But if it dropped down, there was a potential of me making another $1,000. And it could have gone right back down to the 240 where it initially started. Pretty awesome play. That didn't quite happen. And when I closed this, the stock was actually trading at 297. It had gotten slightly in the money. It actually went further than this, but I closed it early in the morning on September 12th. And I alerted that and I got an additional $200 credit to close this trade. So overall, on my $96 of risk, my realized profit was $1,050 in a 3-day trade. I know I did make a couple of adjustments to it, but that is kind of the thing that I like to do. And it's why I have the rolling options record keeper. It allows me to do this type of thing where I can change these attributes. My realized return on investment was basically almost 11 times my money for my total risk. Where's my total risk here on this particular sheet? Sorry, I'm pointing right at it. I just can't see it. Largest margin to calculate return on investment, $96. And I made a realized profit of $1,050, 1,100% return. And look at the compounding. If I was able to do that every 3 days, that's how much percentage-wise I would make. Obviously pretty unrealistic when we do these little trades like that, but a pretty fantastic return nonetheless. And I just wanted to run that trade over with you. So and I just wanted to go over that trade. Now, what I'm doing in my Moomoo account, which is pretty exciting, is I am going to be building these positions and I'm going to be putting on more positions right in Moomoo. I obviously post those positions to my Discord. So if you guys are interested in joining that, you can head over to patreon.com. You can join for free. You can see some of the chat. If you want to upgrade, you can see all of my trades in the paid portions. But those are the type of trades that I'm putting on. Okay, we're going to take a look at questions. So Rock is asking about RZLV, and I am going to show you guys in Moomoo. So this is Resolve AI. Stock has been on an incredible tear as of late. We can see the last little while has gone from $3 now trading up at $7.61. We're actually having a red candle today, so we hit a peak of around 850, and now we've retraced down to 760, which is where we're trading right now. and what kind of play could we put on this? I would love to know, Rock, are you bullish, bearish? What kind of things do you want to see? Now, one of the things I love about Moomoo is that it has like AI strategies in here. So I can go out to October and I can say, you know, what is a potential strategy if I was neutral, if I wanted to put on a neutral trade? It pulls optimized strategies for me that I can just trade at a click of a button. So here's like a long put butterfly where I'm risking $97. I could make $141 max profit. Probability of profit is 31%. So I can choose how to play these. You know, they're typical with short strangles. We're looking at probability of profit of 65%. It's pulling those up automatically. Short straddles have a little bit higher theta decay, but they have a slightly lower probability of profit. But again, these are all trades that we could take. Sometimes it's better to be directionally, take a directional stance on these. So I might look for a bearish trade. I might look at this and say, you know, chart wise, from a technical perspective, this stock could come down. What happens? What happens if it comes down into in this area next month? Can I make some money? What if it came all the way back down to $3? Is there money to be made? And usually there's something that we can do where we can find something. Here's a long put. We could buy a long put for $37 that profits if the stock is trading under $5 or less. So we've got maximum profit of how much could you make? You could actually make about $500 max if RZ or if Resolve went to zero. I don't think Resolve is going to go to zero. But that is something that we could do if we wanted to get a bearish position. The other thing we might look at is here's a short call spread, and then here's a long put spread. So here's a long put spread that has a $17 risk. It's long the 550 and short the 4 put. And what that does is it gives me potential of making money to the downside. Now, if I was really bearish, what I might do is I might sell a call against something like this. Now, I don't want to do that if there's a short squeeze risk. So I might want to define my risk and put a defined risk strategy in play above. Let's take a look at October and see what we have. We've got October 1st earnings coming out. So this is going to be an earnings play. I love Moomoo for just showing me right there that the earnings are coming up. It shows it right between the dates. We can see the September 19th expiration, October 17th expiration, and then earnings October 1st, which is pretty great. So I might go out here and say, what if I was to sell a call above the current price and then buy a call and make a limited loss trade above? And let's see what that looks like. This is a fairly high risk, low reward trade, but what it will give me is it will give me a very high probability of profit. This is an 88% chance of making money. What if I was bearish on Resolve? What I would want to do is try to find a butterfly or something down below that I could make some money off of. So what I typically do is try to finance them with something. In this case, this is going to be giving me about 17 cents in credit, and I have an expiration risk of about $200 because this is a $2 wide spread on that trade. Now I can go back to the table, and this is where I would come in and I would look at purchasing a bearish position with that $17. So I would buy maybe the 6 put and then sell the 550. And what this is going to do is give me a trade that has some potential now. The net credit to open is going to be basically zero, so I'm not going to get anything to open this. And as long as the stock stays under $12, I make nothing, but I have the potential of making $50 if the stock was to drop below 550. 550. I could make $50. That's not a bad return on capital. It's a $200 risk, making 25% return on a bearish play. If it doesn't, if it just stays between $6 and $12, then obviously I make nothing, and that's fine too. Making zero is okay. So that's kind of how I might set up. I don't love that setup, especially. Another thing I could do is, let me just erase the calls off of here. and build just like a put butterfly on the downside. That might give me a little more credit. So what if I thought that the stock was going to, let's turn this off. I'm gonna do the long, I'm gonna start at the top. I'm gonna build like I'm gonna see if I can build a, yeah, there's no value in the threes. I think virtually free. I mean, if it was gonna drop to 3, I mean, you're paying nothing to get into these spreads. Let's just clear this all. Max loss 750. Yeah, I mean, they're pretty cheap. This is where doing, you know, I spend quite a bit of time typically, so this is 20-cent risk to make 30 bucks. That might be okay. Depends on how aggressive I want to be. There's obviously lots of money on the call side. The other thing we can do is play it to the upside. You could say, well, maybe it's going to push up. So we could just play both sides and look for a move to the outside. Let's go to the curve and let's look at that. So if the stock drops back down below $5 or goes up above 940, there's a chance of making $60, and the total risk on this trade is going to be about 40 bucks. So double our money with the stock moving either direction. This trade has the advantage of actually making money. You can see the green dotted line. It would make money almost immediately if there was any sort of move. So depending on how much profit we wanted to take on a $40 risk, even taking a $4 profit would be a 10% return. Well, we don't have to go very far to make a $4 profit. Like the stock only has to drop to 550 to make 17 bucks, or it would have to go up to around 950 to make $8.40. So playing a large number of contracts and then looking for that swing one way or the other may result in a pretty easy take profit of around 10% return for those people that are looking for that. You've got a month for it to move, and it would be positive either direction, and just take a low percentage return. Jimmy Traders is asking, does it matter to you that Futu Holdings in China owns Moomoo? Moomoo is a subsidiary of Futu. Well, it is owned by it's interesting that for me that doesn't matter. You know, we have companies all over the world, so that's whether or not a Chinese company owns a brokerage doesn't matter to me at all. What I care about is whether or not our funds are protected. And if you go and take a look, let me just pull it up here. I've got my link. I'll pop it in the live stream here. If you guys click on that link and head over and check out Moomoo's website, you'll see that they are, you know, Canadian registered brokers underneath the umbrella of Futu Holdings. So they're actually a company that is registered in Canada that operates under the umbrella. It's interesting enough that right now the account is actually an Interactive Brokers account. Now they're making a change to I'm having such a hard time remembering. It's not a biggest firm that I've used, but it is another Canadian firm that where the accounts are actually going to be held. So Moomoo is basically a skin. It's like allowing us to trade and shows us all of the cool features that it has, but the accounts are not actually held in Futu Holdings, if that makes sense. So it's registered with a brokerage underneath, and we're just using it as a trading platform, which is part of the reason that I like it. You know, I don't want to risk my money going with some, you know, offshore accounts and things like that. So I have to have accounts that are registered and protected in Canada, so our funds are protected. And you can read all of that on the website. So let's take some other questions about specific stocks. I'll pull up some trade ideas because, again, the whole point of doing these streams is to show you how my brain kind of functions, how I'm looking for stocks, what I'm doing, and I'm trying to show you the behind the scenes. There's so much that I can do when I make my tutorials. You guys can watch my videos, and I very much appreciate you watching those. they're very polished when I do that. They're like a very, very set position. But as you can see, when we do this live, there's always alternatives. There's things that we can do to be bullish or bearish or neutral, depending on our assumption. And I like to do that with you guys. I like to show you my process because I think it gives you a good understanding of how I function within my trading room as well. You know, as an options trader, I love this stuff. I've got my monthly stock traders group meeting tonight. We get together for beer for like 3 hours and just talk about options. And it's fantastic. And yesterday I met two of my friends and we talked about options all afternoon. This is like, I live and breathe this stuff every day, and I love it. So when I get an opportunity to speak with you guys and I get to interact in my group, we get to like look at some of these trades together, and we can brainstorm and we can say, how can we improve these strategies? And I need your input on those. So if you guys drop those tickers, it gives me some input, and then you know that none of this is pre-rehearsed. I'm just like looking at it because you're directing where we're going. Let's do a little market recap and take a look at what is going on. I'm going to just pull up my trading view in a second here, and we'll take a look. So SPX, I've got Baidu here, just absolutely screaming out of the gate here this morning. I don't know if you guys noticed, if you follow me on Instagram, which you should, I posted a trade idea on JD this morning. It's already profitable. So it was a very, very quick trade on the market open this morning. I'm expecting a similar push that Baidu's getting. We're looking for some of these Chinese sector stock to jump up. So Baidu, we had that up from the last time I was speaking with people, which was Thursday in my members only group. And we should just quickly take a look at JD just to see how much it's moved. It hasn't moved all that much. It was about 34 bucks this morning, but I'm expecting this move to come. I think we're going to see a push in price up potentially into the 40s. The fair market value, if we were to take a look at Moomoo, one of the cool things here, JD, if we look at the profile, valuation, slightly different. Well, I use Moomoo mostly on my phone, which is one of the things I really like about it. And some of the things are slightly different when we look at the desktop version. But we can see a target price here, which is updated today. Max target from analysts looking at $60, average 42.03, and minimum 30. The stock's trading at 34.84, up $1.20 today, up 3.6%. And again, if you checked on Instagram, Drawbridge Finance, you would see that trade in my story today. I did post that. I think there's still time to get into it. It hasn't moved up that much. There's a strong buy. And of course, everything I post, not recommendations in any way, shape, or form. It's just what I'm doing, what I'm looking at. You know, it's the things that I'm trying to take a look at. And when I look at this chart and I see where the cluster of trading was prior, you know, we were up in the 40s. And I believe that similarly to Baidu, we're going to see a catalyst that's going to bring this up into that price. And I'm willing to bet some lotto ticket cash on that. So trading small risk, high potential reward, just like that Oracle trade I did last week. Let's get over to the trading view and we'll take a look at SPX. Relatively flat today. We're having a very, very inside day. Now tomorrow, obviously, we've got big news from the Fed. We've got interest rate release, and we'll see what happens there. But we're at the very top of the Bollinger Band. We've kind of moved outside of this this blue channel. Kind of have to move that down because this candle wicked outside of it. Point of control marking at 36.65. Yesterday was an all-time high close, just above 66.10, and we're now still trading above 6,600 for the first time ever on SPX. NQ, again, just touching the top of the Bollinger Band. It doesn't necessarily mean when it hits the Bollinger Band, we're going to automatically see a pullback, but there is potential at any time. So it can ride up here quite a bit. And of course, we saw it just touch a little while ago, and then that came back down. That was in the beginning part of August. So we may see that set up again where we see the rise and we see a small pullback. We'll see what happens with interest rates tomorrow. Russell is the one that could benefit the most from an interest rate decrease, which we're expecting. The conversation really becomes, is the Fed going to reduce by 1/4% or 50 or 0.5%? We'll see what happens. But if there's a 0.5%, which I don't think is likely, I think we're going to see a 1/4% reduction. But you know, you never know, and that's why they wait for these announcements that they do monthly. So we'll see what happens. If there is a 0.5%, I think IWM could come up quite a bit. If there's 1/4%, which is what everybody's expecting, then we'll see we'll see flat to moderately bullish. I don't think we're going to see a major pullback at this point in time. U.S. oil's up $1.98 today, creeping just slightly outside of my range. I have a very profitable trade on right now. It's been a nice little play. I was very patient for it. You guys remember, I was watching and watching and waiting, and I was biding my time until I got down into the range that I wanted. Sometimes trading is like that. I can take setups anytime I want if I'm forcing a trade, but sometimes it's better to just wait for the right setup, and I did that, and it's been paying off very, very nicely. Gold's trading at 36.88. We continue to see this upside. Point of control is way down here. I have some slightly bearish positions on, so I'm looking for gold to pull back down into this range and make some money if there's a bit of a pullback. So I have short deltas in my gold holdings right now. Silver way outside the Bollinger Band. Again, for me, if I have positions on, I only have one position on an SILJ, and it is targeting. It's actually probably even lower. I think silver would have to come down here for max profit, but when we're outside of those bands, I'm often looking for a move down into an area where I can make some money, and I continue to collect a little bit of theta decay and keep those positions on. They typically aren't large losers when they run up like this, especially if we're playing with diagonals. I love diagonals. That's like one of my favorites. So Apple, we're seeing, you know, a nice little move. It's trying to decide, what is it going to do? You know, a lot of these stocks, AMD had a bit of a run, but if we were to just like draw a trend line on here, you know, like there's the trend. So are we in there? Probably a lot more than you think. Let me just draw a line on here. So I always do that. So there is a potential trend line that hasn't really been touched at all, has it? It's probably more like this. Yeah, it's a little messy, but we'll see what happens there. I'm not sure what's going to happen with AMD. They're obviously profitable. They're pumping out chips. They've got lots of back orders. We'll see what happens. ARK back at $80. Now, remember pandemic times when this stock was like 125 bucks? I remember I loaded up on some shares here, selling covered calls against them quite lucratively when they're up in that 100 range playing this. It doesn't seem like that long ago, but that was 2021 already. ARK, obviously trading inside of these Bollinger Bands, has broken out of this channel that I drew on here ages ago. And we're seeing that to the upside, but again, still inside that Bollinger Band. With these, what I do is I skew my trades slightly. So I'm looking for profit kind of in ranges like this. You know, I'm not saying, oh, I'm going to make tons and tons of money. I have some covered calls right now at 68 bucks that are basically at full profit. And I have to decide, do I let those shares get called away? If I do, that may trigger some capital gains. Or do I just continue to roll the calls and get slightly higher prices as we go? 68 level is feeling pretty safe to me here. And considering the year that we're having, I'm going to be paying a little bit of money to roll these calls up and keep some extrinsic value on. As you guys know, I like to do that. Hold positions and just continue to roll calls against them in perpetuity. I don't have to sell my shares ever, and I don't mind rolling them when they're far in the money. I just don't want any whipsaw, so I have to be diligent about how much I'm getting. If we were to look at the chain on ARK, which we're going to right now, I'm going to pull up how much money, what the zone is for selling selling premium in there that provides a realistic expectation or realistic outcome potentially. So if we look at the chain and we look at the table, let's go out to October, which is 31 days away. Now, if a trader wanted to make a 1% per month trade, which is how I started trading options. That was kind of the rule of thumb. That's the 71 short put. That's giving me around $70 credit for a 71 put. From a return on capital standpoint, if we look at the curve here, we have a 88% chance, of making a max return of $70. Now, the max loss on this is $7,000. Now, I don't know how good you guys are at math, but that's 1%. $70 of $7,000, 1%. In 31 days. If I wanted to do that, that trade will give me 12% a year. Now, 88% chance of making 12% a year. That's pretty good. And you can see why I might want to continue to be in a trade like that. What I don't want to do is be in a position where I am, let's go back to that table, making too little. So what if I was to hold the 68 put instead? What if I was holding the 68? Just change that here. Click select. Now I'm going to make $44. That's about 0.5% or 6% a year. Now, making 6% a year, although there's a higher probability, 94%, that is not the greatest trade for me. So when I'm in a covered call position, it's 68. I have to pay to roll up. I want to be in that 71 minimum if I want to make 12% a year. I have to make that decision. Am I going to put more money into this trade, or I'm going to take my win, let my shares get called away? I'm never ever upset about letting my shares get called away in a covered call situation, because I do this math every single month. Now, it brings me to a question that I get asked a lot in my trading room. People see me rolling these trades. I have like things that have been rolling and rolling and rolling forever. And they're like, well, how do I get into a trade like that? Every time I roll, I'm assessing it as if it was a fresh trade. I'm not just like rolling because I'm rolling, that doesn't make sense. If I was to have a 68 short put, if I was looking at that, or in the case of doing the call and having 100 shares, which is the same strategy. If we look at that curve, you'll see the profit loss is the same. If I wanted to do that, if I thought that 0.5% was an okay return, then that's what I would roll into. But I'm not going to do it just because. What I'm going to do is say, well, I don't like that 68. If I want to keep my shares and I want to keep this position in play, I might go up to the 71. That's an acceptable return on capital. And I may have to pay a little bit. I don't mind paying if I'm paying into a winning trade. There's an 88% chance of making 12% annually. And that's the kind of thing that I want to do. So that's what I'm looking at. We could do all sorts of fancy things, but these types of trades can be very, very simplistic, and they work extremely well as long as we're recentering them constantly when we do roll, if that makes sense. Rock says, thank you very much. RZLV, you're bullish 6 months from now. Really, yeah, I mean, I can see why. Just going back from a previous conversation here about Revolve AI rather, I can see with these AI plays how we would potentially be bullish long term. The question for me is, when we've seen a massive run up like we have in some of them, is there an opportunity when it pulls back? I am often looking at those saying, I bet it's going to pull back before it's going to shoot up again. Like, they don't just go up, and then especially on a 6 month time frame, there's going to be a pullback at some point. So that's why I like to just say, be patient, sit back and say, can I catch a little bit of this first? And if there's a pullback, it doesn't have to be big to make some money. That's why I'm using spreads rather than just like a long put can make a lot of money. So doing a put spread can be the way to do it. Just looking for that pullback and then an acceleration to the top. Getting a little bit of positive theta decay or very minimal negative theta decay can help us a ton in those situations. We're gonna look at, Alex, do you make any automatic trades like weekly SPY, out of the money put spreads or anything, or is it every trade you make deliberately chosen every trade that I make is deliberately chosen. So automation is relatively easy out there. There's lots of places that do automation, but I find that with automation, the best way to run those is as an automation. Set it up and let it run. You know, I have some AI portfolios that are being generated. I'm collecting that data, and then I'm releasing that data. The performance has been fantastic. Like, I can't actually believe how great the return has been. I've only been running that for 4 months, and I know we've been in a bull market, but the performance has been way better than I expected for such a simplistic trade. So in that case, it's an automated thing where it's like the first trading day of the month, I am evaluating the portfolio. There's 25 stocks. There's up to 25. I'm selling off some, I'm keeping some, and then I am buying new ones each month. And then I'm recording those gains. I was working on a little spreadsheet that's going to kind of break it down. I wanted to get a data set going, obviously running it in my service already, but it's hard for me to say, oh, this is like great when I've done something for a week or a month. You know, I have to have a couple months behind me. So it typically takes me a little while to kind of roll out the results of what's actually happening. But that's the nature of trading in general. So as far as automation, like with 0DTE, SPX stuff, I would actually love to do that kind of stuff. If you guys have any suggestions on who out there has a really great integration of things that we can program, I would love to talk to them, see if that's something that I can add to a subset of my portfolio. But at this time, what I'm doing is I am pouring through just tons and tons and tons of trades daily, and I am looking for the absolute optimal, and then those are the ones that I take, because my reputation relies on winning trades. That's how, you know, people don't stay with services if the trades aren't winning. That's how that works. You know, I have to tailor to my customers, which is you guys. So, and the reason that I charge is because I tried running a free group. You guys know this, right? We've talked about this before. I've run a free group and I do lots of free trades on these Tuesdays. I do free trades on my Instagram. But the free trades are way too much work in a Discord service. I can't actually get to respond to everybody because it's just like a constant barrage of data. So by charging, it's a limited group, and then that way we get, you know, you get to have a piece of my day where I can say, this is what I'm looking at. And that's what the reason people are in paid groups is, because it is a small group of individuals that are trying to, you know, really optimize what they're doing, if that makes sense. NBIS, let's take a look at that. Love it when you guys throw tickers out here. So I'm gonna just do a search, NBIS. Okay, so we had a high of around $87. I'm not familiar. You know, this has come up a couple times, this ticker. I know I recognize it, but I'm not familiar with the company at all. We can look at the profile. Yandex, technology company that builds smart products and services, machine learning. So this is AI, navigate online and offline works. Nevis. Okay, so are they making money? Key indicators. Let's look at the valuation. So currently it has a strong buy rating, 86% of analysts. Based on 15 analysts, we've got a max target price of 130, average of 95, and a minimum of 70. You can see who the analysts are, which I love this about Moomoo. And we'll look at the chart, and we can see that we were trading down around $17 in April. And now we're trading at this valuation, $76. The prices are way over here. If you guys are wondering where I'm looking, I don't know why it's set up that way, but the prices are on the left. And then, sorry, we're not there. We're trading way up here. Wow, $89. In this case, I mean, a similar conversation, especially when we see these gaps. So we saw earnings. I get it when we see a gap on earnings, but there must have been some news release. We got a lot of volume. We got a big gap here. Gaps typically get filled. You know, I am a firm believer in that kind of thing. So Are we going to see some retracement down and fill this? So I would be marking the top of this chain, or sorry, the top of this candle here, and saying, let me just draw some lines on here. Let's go to my drawing tools. Let's go horizontal line and just draw one here, and then we're going to draw a horizontal line here. And so those are the levels, and so that's like 86, just around $86 and $76. That's how I would play this. I would play this to the downside and say, I bet we slip back down into this trade. So let's go to the options chain and see if we can build something. Strategy builder, do we have some potentially bearish trades? These are very bearish. Short the 79, long the 81 put. This is a long put spread. This is for September 9th. That's a pretty tight time frame, but if you wanted a lotto ticket play, you thought that this stock was going to dump in the next couple of days, $15 risk to potentially make 185. Those are game-changing type of trades. They're massive, 1,200% potential return on capital. Again, here's another one. This is using short calls. This is the similar strikes, the 82 call, the short, the 79 call, max loss of 25, max profit of 275, and the 79 is the, you're taking considerably more risk, about 40% more risk from $15 to $25, but then you're also potentially making another $100. So either of those trades could be good if there was a thought that these could go down. Let's look at next week. Look at this, 2,900% potential return. Long the 75, short the 72 call, $10 max loss. Let's see if we can actually put one of these on. Let's do the 72, 73. This is the 70, $12 to do the puts. If we trade this, then we'll get the money in our account to start the trade. And the stock would have to drop, the max profit would be below 72 by the end of next week. Let's just go back to the chart. So a week from now is the 26th. It's right here. I want to put a vertical line there. Just going to draw out. This is how I set up these trades. So 26. First of all, I'm establishing an assumption, and then I'm targeting a range. So there's my potential goalpost, so to speak. And that max profit occurs if the stock is under 72, which I don't think it's going to get there. I don't think in this week it's going to go that far. So I might not take that trade. Let's go back to the trade. I want something that makes a profit if we trade under $86. So I'm going to go to options. I'm going to change. I'm just going to click on bearish, and I'm going to see what happens. What can they pull up? So this is long the 85 and short the 84. That's getting closer. And then this one's down at the bottom of that. But there's $25. This is a 3-to-1 risk reward ratio. And it doesn't matter that, this could happen on the first day, and we could convert this over because it would take most of the profit. Or it could happen on the last day. It depends on when it happens. So this is where we learn to adjust, and using the Rourke helps us adjust those. So I don't mind taking a trade like this if I thought that the stock was going to drop below that 84 level. So let's go back to that chart. 84 is right here. Do we think it can pass that in the next week and a bit? Absolutely, I do. So I'm going to put this on. I'm just going to take this trade as it is. I'm going to see if I can. It's going to cost me a $60 credit to open. And this is a $1 wide. So this is going to be $40. Let me go back to that. It's showing a max loss. I need to get $75 to open that. So it's showing a mid price of 60. I want to change this to 75 to get that 3-to-1 risk reward. And then, so I'm going to be starting the trade with a credit of $75 if this trade opens. So I'm just going to click on unlock. I'm going to put in my password here, and then can I put this in as a, how do I get this as a good to cancel on here? Again, I've only been using this for a month. I actually haven't traded very much on the desktop platform. The mobile app is fantastic. Show more or less. No, that's the wrong way. Oh, there it is. Good to cancel. Okay, of course, it's right in the summary here. So I'm going to just hit submit, and what this is going to do is it's going to it says that I have a low selling price right now. I am selling the 84 and buying the 85 call, and I'm collecting $75 for this to open. The hope is that they both expire worthless. The stock drops below $84 and I don't have to give back any. The most that I would have to give back if it was still trading above would be $100. So I'd give back $1 debit at the very most, and I would be out of pocket. 75 minus 100 equals a negative 25. So that's how much my risk is if I open this for a $75 credit. I'm just going to hit confirm, and my order's been submitted. I don't know if it'll fill, but I want to get a good price on that, so I won't take it if I don't. And yeah, we'll see what happens with that. Shapa, hi, do you have any suggestions on how to handle deep in the money covered call? I have Google November 21st, 225 call, 2 contracts. Well, let's take a look. Let's take a look at what that position is right now, because so it's GOOG or GOOGL. It says Google. It says GOOG, so I'm going to assume that it's this one. Stocks trading at 252. Let's go to the options chain. And again, we look at this based on what the position would pay right now. What is the risk? What's the potential outcome? So if we were to go to the chain, look at the table, I'm going to collapse the September. We're going to look at November 21st. Thanks for providing all the details, by the way. That makes it so much easier. We've got the 225 call. Now I'm going to do this. It's good that you said there's 2 contracts, but I'm just going to look at one. And so what if I was opening this today? It's 66 days out, which is definitely within the range of where I might want to sell covered calls. There's plenty of extrinsic value here. If we look at the put, we can see, we talked about this before, but the put on the 225 has about 465 bucks. That is 2%, more than 2% of 225. It's just slightly more than 2%. 2% would be 450, and we're at 465, 475, and we're at 66 days. So this is right in line with making approximately 12% a year or 1% a month. There's nothing wrong with that type of trade at all. So I know just at a glance that this position is already in a position where a lot of traders can say, you know what, I can handle quite a bit of downside and I'm okay making a 12% annualized return. I'm going to add the stock leg on here as if I was opening the position today, because what this is going to do is give us a profit profile where we can take a look at how much we're going to get. At expiration, the profit on this is going to be $662. The total max loss on this is $21,840. That's how much capital is currently tied up in the trade if I was to open this today. It's got a probability of profit of making, keep pushing the wrong button, 80.4%. We have a positive theta decay of about 10 bucks a day. Delta's at 20. So not so bad at all. Break evens at 218. The math that I would run on this for myself is I would say, hey, how much of a return am I making? So this is where I pull up my trusty calculator and I just do this very basic math. I look at the max expiration profit, which we can see here. We're just going to use these 2 numbers. How much is this number relative to how much money I have tied up in the trade? And that is very simple. We're just going to go 685.5 divided by 21814. You guys see me doing this math all the time. We're going to hit equals. We're going to hit 3%. right? So what I want to know is annualized, because that's something that I can sink my teeth into. I divide this by the number of days. We know this is 66. So this is going to be my daily return. So I'm making 0.04% daily. And we're going to times that by 365. So 17%, 17.3% annually. You know, obviously I'd have to times it by 100 to get that percentage return, but you guys get the math there. 17.37% annualized for this trade. I think that many people, if you talk to them, if I said, if you put this $21,000 into the stock market, you have an 80% chance of making 17% annually, and you have this buffer, the stock could come down $25. Many people would look at that and say, wow, that sounds pretty good. That sounds better than what I'm doing with my broker. I have a chance of making more, but I only have a 50% probability of profit. I could make more, I could make less. So this is where we have to make those decisions. Now, if I wanted to make more, I would have to take more risk. Converting that is easy. It's very simple. All we do is we change the strategy. If I want to make higher return, I put more money in today. So I would say, I am going to move this call to a higher strike. I'm going to take more risk. This is only a 71% probability of profit. My max profit is now $1,081. My max loss is now greater. So this is a winning trade. And again, I have no problem putting money into winning trades. If my max profit, 1077 divided by 22,921 equals 4.6%, we divide that by 66. Then we times that rather by 365. 25.9%. If I want to make 29%, 26% from today on that money, I need to put more money into the trade. I need to pay to roll that up. It's very simple to do. If I'm in a position, now let's just go back to this. If I want to be in this position, selling the 240, and I currently own the 250, all I do is I just buy out the 225. I purchase this. Same date. So I'm buying the 225 call and I'm selling the 240 call. This is going to cost me some money. It's going to cost me about $1,000, but it's going to put me in a position where I have more money at risk and I have a larger theta decay. I have more potential. So this is where we keep money on the side, and sometimes it's all right to put money into those trades. Now let's look at Google. You know, do we think it's going to come down? Probably not. You know, based on what's going on in the market, but at the same time, it has been on an astronomical ride. 225 is still here. It's at the bottom of this this gap here. So there's that 225 line. If there was something that was going to happen over the next little while, is there potential of that coming down to that level? Could easily, you know, we could easily see this gap getting filled. We talked about that earlier. I see the type of person that thinks that gaps get filled quite frequently. Covered calls are long delta positions. They have a max profit. They function. The best time to trade them is when the volatility is higher so that's on a down day. If there was, if I was on the fence about whether or not I wanted to take that extra risk and move my strike up to like 240, which I think is substantially riskier at this point in time, looking at this chart. Sure, you're making more money, but it's much more likely that we'll trade down here than we would trade down at the 225. So for the sake of putting in extra money, I may not be so inclined to do this. If we see that stock move down, and there's a really nice heavy red day, that would be a very great time to get into that spread. It would be probably cheaper than the $1,000 that it costs now, because there's heightened IV. It will have higher risk, and then we'll be getting more extrinsic value for that roll at a different date. But for the time being, I mean, I think most people would be pretty satisfied making a 80% chance of making a 17% annualized return with a ton of safety in play. And I also, you know, I'm a firm believer that I don't have a time machine, so I can't go back in time. And I have to look at valuations from where we are right now. I can't, that's basically what, I don't have a time machine means. Like I can't go back and change these things. So what is the position I want to be on? How much risk do I want to have? Do I want to put in extra money into a play that's obviously a winning trade? So congratulations on having a winning trade, and thanks for sharing. Alex says, thanks for your insight. Appreciate it. You're very welcome. Are you, Alex, are you doing zero DTE trading? Are you, or zero DTE or any sort of automated trading? I mean, I've used some services in the past that do similar things to what Moomoo is doing, which is like just pulling up those strategies, and I can do it manually. I've been showing you guys for years how to go through and like look at the chart and figure out the pop and like do the things. The AI stuff is just pulling it for us. It's just like getting so smart, and eventually everything's going to be AI. Like everything's going to be automated. I don't even know what's going to happen to the stock market when that happens. Like, is there going to be any edge? The edge is already lower than it was before. It's harder and harder. We have to take more directional trades in order to have real returns. You're welcome, Shapa. So Alex says, I've dabbled a bit. I have some indicators on zero DTE, SPX, reverse iron condo, but yeah, see, you're still typing. So reverse iron condo, I've played those, you know, I've played pretty much everything. I've played butterflies. I've played reverse condors, depending, like if the volatility, you say we have the VIX is down, then we play a reverse condor on those days. What I want to do is not be sitting there at market open. I hate being like at the computer market open, you know, like the whole idea of the style of trading that I'm doing now is, can I do optimal return without being on the computer all day? You know, today, like obviously I was posting a bunch of trades Tuesdays. It's typically a really busy day for me. I'm like on the computer, I put a bunch of trades in at the market open. I got that out, had some conversation in my chat room, do that kind of thing. Then I get to take a break and I'm not at my computer. I'm not just sitting here for 6 hours. If I was going to be doing zero DTE, now that I've experienced what I have over the last, 2 years of trying it, some months were like really hardcore every day, all day, and other times just to like set a trade and forget it. I want that to be automated. I want a good automated system. I think there's one out there. I've just been developing other things recently, so I haven't gone down that rabbit hole of saying which is the best automated system there is out there and how do we implement that, because I think there's a little bit of setup there. And I would love for you guys to email me if you are, if you've got something that's great that you like to use and you want to share, you want to share with the community. I would love to be able to post about it, make some videos to help other traders, because there's lots out there and it's kind of hard to get that information. It's not always the easiest to get the information as to whether or not they're good or not. So if you have one, please post. This is a community where we share information so that everybody can get rich together. That's the idea, trying to build our wealth together. So if there's something great. Alex says most of the testing has been with option omega and some random tests here and there, and that's the same thing. I mean, we all end up in the same boat. I've tested with options omega as well. Coach Z is asking, hi, by the way, joining late today. Any thoughts on SAP? Great software company. I filled at 250 earlier today. No, I haven't looked at SAP in a while. Let's take a look. Whoa. Say, whoa, look at that chart. Does that look more extreme, or like, is it actually extreme? Sometimes it's hard to tell. You see a chart and you're like, wow, that's crazy. Saw 315 high, currently trading at 254. You were able to get in at 250. You're taking a bullish position. I'm just gonna draw a line on here because I like to draw lines sometimes. Let me draw. Wait, there's nothing there. No testing, no stopping. Do we draw this off of where do we pick this up? Okay. I'm gonna say that the trend is to the downside. So let me just move this line all together and say, are we trending here from this high? And then trying to do something there. Is this going to be a bounce? I don't know. This is where I have to like, I have a friend that's really great at technical analysis. This is not really my forte. I like to draw lines and then everybody shouts at me and says that they see things. And I'm like, is that what we're seeing? Are we making it up? Are we following, are we building it based on the trend line? I think that all of it is kind of true. So where would I look at this? Let's just say I might want to put on a neutral trade. So let's go to the options chain, to the strategy builder right out of the gate. Let's go to October and look for a neutral trade because I can't decide. I can't say, oh, I think this would be great. Short strangle, profit, 64% probability of profit. This is like bread and butter trades if you have large enough accounts. So short the 240, short the 270, and 65% probability of profit, max profit 585. The idea would be that we're just trying to make theta decay on that. Short straddle, I typically, if I'm looking at trades, I would typically start in a strangle and then convert to a straddle if it needed adjusting. So what does that mean? Like, let's say that I started this trade with the 240 put and the 270 call. And then the stock dropped to 240 right away, went down to 240. I can always roll this call down to become a straddle. I can convert this into a straddle. That's typically how I run. The other way that I might do this is I might just say, well, I'm going to be in the trade for a while. I might want to put this trade on and then I've got some downside, and if it stays in the range, great. I take profit at a certain point, you know, maybe 50% of max profit, or you could hold the expiration. Either way, been proven that we typically, if it stays in the middle of the range, that we get more return on capital if we take profits early. That's only if it stays right in the middle. If it moves to either side, then it becomes a wash. And sometimes it's better to take that extreme theta decay that occurs when it's off to one side of the play. So it really is up to you as a trader. Depends on where we are in the cycle. If I wanted to make one of these slightly more bullish, what I can do is I can just add a little spread to one side, and that might be something that I might be interested in doing. So let's just go to the chain and take a look at what that looks like. So I'm going to go to October. Earnings are October 22nd. We saw that. Did you guys see that on the screen? That little blue line. So October 22nd, again, like just loving some of these features. Thank you, Moo Moo. Well, we've got the 240 short put, and then we had the 270 call. So if we were to do that, and we're looking at the curve, we're going to see what our break evens are on those. So 234, 275, and this is where I go back to the chart and I mark that on there. So I'll take my drawing tool. I have to figure out how to do these drawing tools, but 275. So we got 275, and then we've got a 235, right? 235, and that's kind of nice. That lines up with the previous bottom, which is good. And so that's a nice break even on the bottom side. Typically what I like to do with these is I like to be a little bit aggressive with them and convert them into something else. So I'm going to show you a Batman trade. Right now we've got a 64% probability of profit. We have a theta decay of $20 and we have a max profit of 580. I'm going to show you how I would adjust this trade to potentially make more money and have very, very, very similar theta decay in play. So the theta decay is important. $20 and $21, 65% probability of profit. So I'm just going to go back to the chain, and I'm going to go to the curve here. First thing I'm going to do is slide these way in. So my break even is 235, and my shorts, I'm going to slide up one position to the two. Oh, do I not have a 245? Maybe I can't do it on this. Yeah, there's no this isn't, there's not enough strikes in here for me to do this. So I'm not going to show you. Sorry. I was going to show you something fancy, do some ratio spreads, but that when there's not enough strikes, that's the kind of thing I would do. Maybe I could do it on the call side. What if I bought the 260 and then sold two of the to the 270s. If we go to that curve, this is going to give me a higher break even on the upside 280. It's going to give me a higher break even on the downside at 237. So if we go to the chart, those are both going to move. We're going to move this up to 237, which is barely anything. But then we move this up to 282. So if I wanted a more bullish trade, that would be a way to set this up. Now the profit is smaller in this middle section. Is it bad? It's certainly not. 285, if you guys look at that green there, the expiration P&L, if it's in this range, is 285. Now again, this is a stock that's trading at 254. So if the return on capital in 31 days is 285 compared to 254, that's more than 1%. In a month, that's not a bad return on capital at all. But it also has the potential of making up to $1,250 if the stock was to drift up. So if I wanted slightly longer deltas, probability of profit is actually slightly higher on this, even though it shifted slightly to the upside. The theta is 18, so slightly lower theta. It doesn't make money as quickly. It's only making it $18 a day compared to $20 a day. We would have higher short vega on this, so there's more downside risk if it was to sell off, because the call ratio spread isn't providing as much money as a short call would be. Max loss is still unlimited, but max profit is now 1285, which is double the 580 that it was before. Now I don't think I'm going to get 1280, but I might be able to get like 700. So if I wanted a slightly more bullish trade, this is what I would put on. What do we call that? Rhino. That's what that is what Tasty Live refers to it as, is a Rhino trade. Okay. Alex says, I'm also still looking for good systems as well. Anyways, I have a work call. Good luck with the rest of your stream. Yeah, appreciate that. Thank you so much. And then Coach Z says, unfortunately, our options aren't all that liquid for SAP. Yes, and that it may well be the case. It's still fine to play those like strangles and things like that. Like the options liquidity, if we're looking at those on a company like SAP, the volume right here, we've got lots of open interest. So not tons and tons of trading in here. Do I have those listed? Gamma, mark price. You know, this is where I don't quite have this all set up yet. Open, yeah, there I did open interest. So there's volume and open interest, 52 and 205. There's more volume at the 270. So like having that much volume in a day, holy, that's a lot of volume actually, relatively, at that 270. That's a bullish trade. Let's look at the unusual activity tab. So this is today. We had bearish and bearish. Expiration September 19th. We've got the 3 days to expiration. So this is two bearish trades against it that were opened yesterday, but then the stock is up today. I always have a hard time reading this kind of stuff. Like, is this actually bearish or is this like a covered position? So, because you never know what is being closed, but I have to trust that there's something going on that's telling me that this is a bearish move. So we had a bearish position on the 9th, the 15th, and the 15th. But this 9th, if we look at the chart, did that already occur? I mean, the 9th was here, right? So stock has already gone from, at that point in time, it's trading at 267, and now it's Coach Z said it was trading at 250 today. So that was already a $17 move to the downside. So that unusual activity, this bearish one, has already potentially occurred. And then we had bullish positions, which these ones were just clearly wrong. September 4th, we had and this is where these were executed at the exact same time. These were executed at the same time. So we have two bearish positions, but you have a bullish bearish position executed at the same time on the 19th, or sorry, on the 4th. And that would be some sort of spread, it looks like, where they've got the sizing is identical and you've got one bearish, one bullish, depending on what's happening there. So we've got, what are they? Does it show here? Bid, ask. premium underlying price was 272. Yeah, we'll see what happens with that. Interesting little thing. Thanks for bringing up SAP. I don't look at it very often. Okay, you guys are fantastic. I feel like I am done. We're going to go back. I'm going to zip into my trading room. We're going to take a look at that stuff. So if you're not already over there, head over to patreon.com, sign up for my free newsletter, mark it on your calendars, Tuesdays at 11 a.m. Pacific Standard Time. I do my public stream Thursdays, same time. I do my portfolio, the trades that I'm closing this week. I typically have tons of trades on, so there's lots for everybody, beginners, advanced users. You know, I try to keep it a good range of things, so we have lots to discuss. One more question. Jimmy Trader says SPX strangles, good idea. Been testing, seems pretty good with low VIX. Could well be. Are you? I mean, SPX strangles are a big for big accounts, obviously. Typically, strangles are better in high VIX because if the VIX does spike, a strangle gets killed because of the volatility increase. I'm more inclined to do double diagonals myself, just do wide diagonals. That way, if the VIX does pop, then I have a better chance of having a volatility expansion, getting a little bit of positive vega out of it. But that's how I would be trading those things. Okay, you guys are amazing. Thanks so much. Let's get rich together. I'll see everybody on Thursday, and I'll be in my chat room. Take care. Bye.